We're talking gold this President's Day today with John Doody of the Gold Stock Analyst Group. He joins me on the line from Florida. John, thanks for being with us.
Hi, good morning.
John, I look forward to joining you later in the week in sunny Florida, much warmer than where I am now. I know you're hosting a conference down there. Tell us a little bit about it.
Well, I'm glad to, Daniela, and it'll be great to see you in person. On Sunday, February 24th, we're hosting our annual Investor Day, and this is where we have the company's top management, really the CEO, chairman level of all of the companies that come from our GSA top 10, the top 10 gold stocks that we recommend, and our favorite 5 silver stocks. So we've got 15 top level guys coming to make 20-minute presentations to our attendees, and it's an all-day event that starts with breakfast in the morning, and we're providing lunch, and then runs to a cocktail party in the evening. We think it's going to be a great opportunity for investors to meet firsthand the top guys from these companies.
Who are some of the companies attending, John?
Franco-Nevada, Royal Gold, Eldorado Gold. I don't want to give the whole top 10 list. That's why we want people to subscribe. But Silver Wheaton is coming on the silver side, and companies of this nature, and most of them are producers. Some are soon to be producers. But as you know, our analysis focuses on companies with data. We don't follow explorers.
John, and we'll get to the keynote speaker in a bit. I know you have an exciting guest lined up, and we'll be telling everyone who it is in a second. But before we get to that, I'd like to get your thoughts on the state of the gold market right now. Some analysts I've been speaking to are a bit concerned about what's happening on the gold front. What is your sentiment?
Why is gold not performing? We've got an ongoing negative real interest rate where it costs people money to put their money in the bank. The loss of purchasing power at the end of the year is they can't buy as much with their $100 at the end of the year that they could at the beginning of the year. So I think it's kind of like an elastic band that gets stretched further and further and just hasn't broken yet. And maybe the next increment of stretching comes from some kind of a currency war that was started, was originally started by the U.S. dollar. The loose monetary policy and low interest rates means that a currency is less attractive to foreign investors. And the U.S. dollar is actually lower than the euro was when it started back in 2000 or 1999. But in any case, the most recent episode of this is the Japanese, the new Prime Minister Abe pursuing a very loose monetary policy, and the yen has fallen since last October. It's fallen 17%. That should mean that Hondas and Toyotas are going to be a lot cheaper in the United States and going to be tough for the U.S. producers to compete against. In any case, nobody wants to have a currency war. Nobody wins in that. It's a beggar thy neighbor policy. But the fact is the Japanese have started it, and there will have to be some kind of responses one way or another.
John, we'll get back to currency wars in a second, but just sticking to gold now, when you see billionaires such as Soros acting as net sellers of gold, is that a red flag?
Not really, because they're traders. They're hedge funders. They just follow the most recent trade. And, of course, Soros made his bones when he broke the British pound in 1992. The actual, I think he left gold in order to follow the yen trade now. And it's been a winning trade since last October. The data that was reported showed that gold has gone down and the yen has gone down, and so if you left gold, you left it at an opportune time, and if you're playing the short the yen game, you've made a lot of money, and we know that a lot of money has been made by the hedge funds playing in this. They'll be back. They're just playing the latest trade, and Soros didn't sell everything. He just sold some.
So, John, I'm sensing from your voice that you're not really that concerned. Is this just a temporary correction for you?
That's what I see it, because it's the underlying fundamentals. It's a negative real interest rate that drives the gold price, and that hasn't changed.
So now getting back to currency wars, John, we can now reveal who your keynote speaker is. It's Jim Rickards, author of Currency Wars, and what a topic that's really trending right now. What do you think about currency wars, and do you think we're on the brink of one, first of all, and who do you think is in the lead?
Well, it's always tough to tell who's going to be next. I mean, we've had a couple of minor devaluations. Venezuela devalued their currency 33% against the U.S. dollar. Doesn't really make any difference because they're a small player, but certainly Japan is a major player as the fourth largest economy in the world, going through this devaluation, and there could be others that come from it. Who's going to be next? I don't know, but probably somebody or some countries are going to react. Maybe the euro will react because certainly Japan becomes much more competitive versus Germany.
John, thanks so much for your thoughts today. If people want to register and come out for this event on Sunday, how can they do so?
They can sign up online. Just go to our website, goldstockanalyst.com, and there's a big red button right on the front page that leads you to all the information how to sign up, and we'll look forward to seeing people there.
Well, Kitco News will definitely be on hand providing coverage from the show. John, look forward to seeing you in Florida.
Okay, great, and hopefully the weather will be a little warmer then than it is now, but it's still warmer than it is for you in Montreal.
Absolutely. Thanks, John, for your thoughts. And thanks for watching this edition of Kitco News. You can email us any comments or questions at newsfeedback@kitco.com or tweet me at Daniela Cambone. Thanks for watching.